All right, so thanks for joining me in this video. And what I'm going to do in this episode is I'm going to share with you the MACD indicator, but the simple no BS way to apply it in your trading. Now, you might have seen other videos out there about the MACD or hey, how great it is and amazing it is and just different ways to use it, the K line, to this line, to the whatever line. And this is when you get in, this is when you get out, but you got to watch out for these. And I'm not going to do that. I'm going to keep it super simple for you. And I'm going to actually share with you how to properly apply it in your trading and how to make it even more simple than that. But I will say that when you look at indicators, it's near the bottom of my list. Like when I look at indicators, it's near the bottom of my list. So when you actually think about what's more at the top of my list or what's more of a priority, well, I'll go ahead and share that with you at the end. So be sure to stick with me towards the end, and then we'll go ahead share with you how the critical things and more important things that we'll go ahead and cover. So anyways, with that being said, let's go on to the MACD indicator. We're going to go in and check that out. I'm going to go pop you over to Investopedia a little bit to give you the initial jargon for it. But it's really a moving average indicator, moving average, convergence, divergence. So how far are they spread out? That's all it is. Moving averages. How far are they spread out? That's it. And what they're looking at is the 26 versus the 12 period moving average, exponential moving average, subtracting the 26 versus the 12. So when you're looking at this indicator, you're basically looking at how far things are spread out. 12 greater than 26. That's it. That's as simple as it gets. So I've got two indicators here, moving average, the 12 and the 26. And you can see those lines on the chart. And once they cross over, you get this green effect here towards the bottom. So they're crossing over right around here. You're getting this green effect. As they get further apart, let's say they get, whoa, one is further apart than the other, you get that. Okay, so you get more big green bars. That's all it's doing. It's just how far they spread apart. Okay, so that's what it's calculating. And the same thing on the downside. Like if they're more spread apart, that means, hey, short-term momentum really far spread apart. This thing is really, sucking some wind. It's, in other words, it's kind of getting bearish. The problem with this indicator, as a lot of people will say, is, well, where's the trend? Because you could have it still be showing you a signal it's going up, but the trend is kind of going down. So anyway, point being, one way to avoid this is to kind of also add in a longer term. Let's say we go ahead with exponential moving average. So exponential moving average, and we just put on something that's, let's say 80, 89, or a longer term trend. And now I've got a longer term line here. I'll make it nice and thick for you. So that's another way to see, hey, are we trending down or are we trending to the upside? So now when one crosses the other, this looks good. Okay, now how in the world do you use this indicator in a simple way? Well, you basically see is a one line above the other and it's good to go. As far as the range, well, you just don't know. It's picking up. By the time it's spread out, when you wait too far, you already missed a boat. So that's not a good idea. And the better approach to actually looking at this indicator and how to make it more effective is just to color code your bars. So here's what you do. So if you don't have the software for it, color code your bars. So what you can do when you use this is, rather than doing things on net change, what you can do is do one color. Okay, we make everything one color on our chart. So now that I have everything one color, the minute that this indicator shows you, let's say, and we understand what it's doing, the minute that this indicator or the price is really above a certain level, then we go ahead and color code it. So I'll do a conditional color code. And what I'll do is choose a condition. It's going to be exponential moving average. Okay. And now when the exponential moving average, and we'll do the greater than, let's switch them here. Here I've got a 12. I'll make it exact for the time being. And we'll do another moving average, exponential. So now I've got 26, okay? Exponential moving average when the 12 is above the 26. And there we go. So now what are we going to do? I'm going to go ahead and highlight those yellow. So now, look at that. I've got myself a built-in indicator right there on the chart without ever looking at those bottom parts. So I can close this bottom part, boom, and now I don't need it. And I could even declutter this right here and declutter this right here. And now I've got that indicator. So I can see, hey, where do I get in? Where do I get out? It's right here. It's color coded on the bars. So this is really the way to do it accordingly. And why do I say this is kind of a better way to do it? Because when you look at the chart here, okay, so your mind and everything you're doing is focusing here and at this chart and this price right here. So this is where your focus is with your eyes. All of a sudden, for you to evaluate the indicator, you have to mentally make that choice and decision to come down to the bottom to look at that indicator. And that is difficult for people to do. So you're looking at the chart, and then all of a sudden you got to go look down. Looking at a chart, you got to keep looking down. And then looking at a chart, this habit is very difficult to do. Rather than keeping the decision process simple, okay? And now I've got that indicator built in. Now, there is a little bit of an issue with this. Why? Well, because we talked about this longer term item here. Well, here's the other thing right here is that indicator can have false signals, and you want to make sure you're also in an uptrend. So how do you combat this? Well, you can also add in an and statement where it only highlights when it's also above the 89. So we can choose another condition here. And again, I'm using TC2000 by Warden, but you can do this in any software program. I'm showing you the concept. You can also visit our website there to kind of get some more insight or link directly to this software. So here we'll go ahead and go to exponential moving average. We'll add that in, and exponential moving average of 89 is also above the exponential moving average. So now, there we go. That got rid of all of those few little areas. So now it's based on the trend that's longer term and the MACD convergence divergence. And you can see you probably will still have some fake signals in there, but overall, you've got a pretty good system in place, and where you don't have to look down all the time to checking your signals. Your signals are right there, no clutter, no BS, simple, to the point. So that's, I find, a better way to trade it. Now, do you need to know everything about MACD to make it work? No. It's much more important and critical. What I mentioned to you before was these are kind of almost near the bottom of the list of what I'm looking at, because I've got my setup, but it's capital and risk management that's way more important when you do the trade. If you allocate properly, you'll be way better off. Because most people, they go to the charts first, then they focus on learning indicators and all this stuff. And later on, maybe somewhere down the road, they look at capital allocation, they look at how to manage their money, and so on. They spend so much time looking at indicators, whereas instead, you probably should be spending more time on learning how to properly manage the capital and allocate capital accordingly, and manage the risk accordingly, not as much on the charts. Very few people look into researching, how do I manage my risk? How do I manage capital? How do I properly spread my money? And that is actually more important, but it's not what people search for, right? So this is why we're making this video, is because, well, people are going to search for this, but hopefully in this process you discovered and understand that really capital and risk management is way more important than any indicator can ever give you. So, but from an indicator standpoint, this is a nice way to do it. Again, eliminating the human psychology of kind of always going and looking down. All it comes down to is this, hey, you're looking at moving averages where they're crossing over. And if we can color code it, it gives us a much more clear picture of when to get into the stock and also where to get out. So if I look at these past trends right here, getting into the stock, getting out, maybe getting in, getting out, getting back in, getting back out. So you're kind of looking at it that way. Anyway, I hope this helps, gives you a little bit of insight to overall the MACD indicator and maybe a better way to use it without any clutter, garbage, crazy nuances, and just, a mess of technical details that you probably don't even need. So this is just kind of, call it the simple approach to doing it in a real life situation or application. Anyway, hope that helps. Truly appreciate you joining me, and I will see you next time.